A bond is essentially an IOU that the business provides to an investor. The simple way to think of a bond when it's issued is that you have a commitment to pay an investor what's called a coupon, and that coupon could be, let's say, 5%, and you will pay that over the duration of the bond. So if you issued I'd say a £10,000 bond with a 5% coupon, then your obligation would be to pay £500 per year for 10 years, and at the end of the 10-year period you had an obligation to repay in full the £10,000. Now obviously this can be attractive for some businesses because you're paying not capital and interest as you go along, but actually the full amount of the capital is paid, in my example, 10 years after you've actually borrowed the funds. So it gives the business quite a long time to build up the reserves to enable them to repay the facility. A brand is obviously very helpful if you're doing a bond issue because members of the public, if they're familiar with the brand, are more likely to provide finance. But not necessarily essential, but it just means the business would have to work harder to, if you like, sell its case to the public. I would say on the whole you probably would need to be borrowing in excess of £500,000, but there has been some notable successes in raising bonds in recent years. Hotel Chocolat raising £4 million in the bond markets. So certainly, in summary, you would need to be not a very small business and one that would be able to support borrowings of the size I've mentioned, but certainly an option for some.